Welcome back to my weekly QQQ trade update. Today, I'm rolling both a cash secured put and a covered call. With the share price at $521.66, I've made a strategic move. Instead of my usual 1-week roll, I've extended it to 2 weeks. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals, coming to you today from chilly Durham, North Carolina, where I'll admit I'm a bit distracted by the activity outside of my sliding glass door. This little squirrel has been giving our usual Carolina Wren some serious competition for peanuts. But back to the trades. The higher premiums not only bumped up my annualized returns, but also let me set better strike prices. Stick around to the end for a few more views of this little visitor, but first, let's take a look at the numbers and talk about why I made my trade decisions. Today is Friday, January 17th, and I have 2 positions expiring on QQQ. One of them is a cash secured put with a strike price of $500. The other is a covered call with a strike price of $510. Last week, the share price was $504.68, and I rolled both of these positions out of the money, but in a good problem to have, QQQ has recovered significantly today, and the share price has increased. Let's take a look and see where it is. So right now, QQQ is trading at $521.96, which means my $510 call is in the money. So I'm going to try to roll it up. Even if I have to go out 2 weeks instead of 1 week, I would like to raise the strike price to get it a little closer to the money and increase the potential capital gains if I am assigned to sell these shares. So we'll do that first. All right, looking 7 days out with a strike price of $510, keeping the same strike price, I can bring in between $150 and $170. Let's see if I could raise it $2 a share. If I raise it $2 a share, I will make almost no income on the roll. So let's look at what I might do 14 days out. Now that's a pretty good roll. If I go out 14 days, I can increase the strike price by $2 a share and bring in $236. Let's just see what I might be able to do if I raised it to $515. Not really worth it. Let's look at 514, 513. I'm going to go with 513. All right, it filled at $182 less trading fees. So I'll put it on the spreadsheet and then we'll come back and roll the cash secured put. That takes care of the covered call. So let's go roll the cash secured put. Since I have increased the strike price of the covered call and the share price has increased, I am comfortable increasing the strike price of this cash secured put as well. So I'll go as high as $505 a share. Let's see what our options are. Well, these are not really great rolls, so I'm going to go take a look at the option chain now and just get a little more data here. So 7 days out, a $505 strike has a less than 12% chance of going in the money. If I raised it to $508, it might have a 15% chance and bring in a little more income. Let's just, for the information, look out 2 weeks. The premiums are a lot higher if I go out 2 weeks. A $505 strike 7 days out would bring me $80, but a $505 strike 14 days out would bring me $240. I don't know what the difference is, but this is a much higher annualized return. And if I go 2 weeks out, I could even keep the strike price down at $503 for a reasonable premium and maintain this $10 difference between my put and my call. So I think I'm going to go for 14 days out with a strike price of 503 because the extra premium seems worth it. Okay, it took a minute, but that got filled at 205. There we have it. These are not wonderful rolls, but they are just fine. The cash secured put is still out of the money, and I increased the strike price of the covered call by $3 a share. And let's do a quick sum of the total expense and income, figure out the adjusted cost per share, net liquidating value, and profit and loss on the position since I opened it. And then we'll close out for this week, and next week's video should be pretty short. If I wanted to take everything back to cash right now, the net liquidating value of the position is $65,188. When we add it all up, I have 128 shares, and my profit on the position right now is $10,731, and my average investment per share is $425.44. And I have spent $54,456 out of pocket. So I'll see you next week for a quick update, and we'll make some new trades on Friday, January 31st. Thanks for joining me for this week's trade update. Don't forget to check back next Friday to see how these trades are shaping up, and in 2 weeks, I'll share the results of these rolled contracts and the next moves I'm making. Maybe I'll even get some pictures of the Wren for you. If you found this helpful, hit like, subscribe, and let me know in the comments if you've ever rolled an option contract and how you made your decision. See you next time.